honey. Shake it, shake it, shake it, baby. Raise your hands up. Raise them up.
All right. Hi, everyone, and welcome back to another episode of the Daily Currency Call with Forex Trading Asia. So welcome back again. And if you are new to the show, just a quick introduction as well. It is episode 374, and it's the 14th of September. Now, what we do here is we analyze the currencies as follows. So on Monday, we do the Aussie and Kiwi, Tuesday, the Euro, Wednesday, the Pound, Thursday, yen and gold, and then Fridays we do CAD and crypto. So this is the currency call where you'll get market economic updates, the key support and resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. And here we will go through what could move prices, possible trade ideas, and we'll also highlight potential targets and risks. Please note as well, a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, so we've got that out of the way here, guys. Now, just to start with, I will just do an analysis on the US dollar. So it is Tuesday. And obviously, we do have the inflation data coming out as well. And now that is tonight at 8:30 this evening. And again, we had some nice questions as well in the chat with the EcoFin group. And that was really good. You know, people were participating. And I encourage that as well, guys. So we'll just bring up the charts here now. All right, thanks to Sam Trade. So we've got the US dollar index, and we'll just bring it up on the 4-hour time frame. I like just to get a perspective of, you know, what's going on the past few days to weeks or so. And we are obviously seeing it's, you know, we're seeing it quite flat. And if we go to, you know, what happened in the equity session, again, that was, you know, relatively neutral. And it was pushing a little bit higher as well last night with the NASDAQ and the S&P 500. And we're just seeing, if we go to an intraday perspective now on the 1-hour time frame, we are seeing, you know, price to stabilize a little bit. We have that, you know, critical news event coming up tonight as well. So from a trade perspective on the US dollar in particular, it's pretty unclear as to where, you know, inflation is going to be. You know, I mean, I'm an optimist in regards to how, you know, the economy is traveling, but we still have these issues that are going on that are affecting, you know, the prices of just general goods and services. Although we did see a miss on inflation last time around. So what I do want to bring up, though, is an interesting chart that I saw, and I'll just share that screen now. We've got here. So this essentially is the Commodity Futures Trading Commission. And what we have here, and I'll just zoom in a little bit. So we've got it from the 7th of July. We've got the 1st of July until this one here, where the cursor is the 14th of September, or it would have been the very start of the 14th of September for today. And what we can see in red is the short positions, the volume of the short positions here in the 10,000 increments, and then the long positions. And as you can see, we have seen a pullback in the short positions as well. So the long positions are pretty stable, but we are seeing a retreat there in the short positions. And what the Commodity Futures Trading Commission represents is more of an institutional inflow and outflow of, I guess, capital. And it's just quite interesting to see what's going on there. But again, really the main event is this evening. So if you are thinking about trade ideas, and we do have the Euro pairs coming up as well, I would just say in the back of your mind, let's, you know, be a little bit cautious, because we've got two scenarios. We've got, if it does miss and it is less, we are going to see the markets respond with a US dollar pullback, most likely. We're going to see stocks move up, and we're going to see risk currencies such as the Aussie and especially the Kiwi probably get a move higher as well. And we were talking about the euro just before as well, Jin and I, before the call started, in regards to how it is shaping up as well. And the previous analysis from last Tuesday really presented quite well on the charts as well. So definitely worth paying attention to here, with Jin just discussing the euro trade idea that could potentially be playing out. So over to you now, Jin.
All right, good morning, everyone. So it is Tuesday today. I will be going through about the euro dollar, but before I get into just the euro dollar, what you actually notice is that as I share my screen, my chart, my news here, is that on Forex Trading Asia, looking at the economic calendar, today being Tuesday, we will be looking at the euro dollar, but we do have the pound news, the UK news on claimant count numbers expected to change from this minus 7.8K, with unemployment rates looking to go from a 4.7 to a 4.6, and average hourly earnings looking to drop slightly, right? So I will also be looking at the pound dollar as a little bit of a bonus today, and then also tomorrow I will still be looking at the pound dollar because we do have a lot of other news, the CPI numbers to be released tomorrow as well. So a little bit more focus on the pound and the euro for this week. Coming back to what the main currency in focus, the euro dollar, what to pay attention to, what could move prices. Tuesday today, we do have the pound news. We have some Eurozone, Euro countries data to be released. But the main approach with the euro data is I tend to take a little bit less weightage on the euro countries individually. What I want to focus on a little bit more is the Eurozone data as a whole. So what you should be looking for here is not so much about these numbers here. Things to pay attention to: US CPI month on month looking to go from a 0.5 to a 0.4. We spoke about that yesterday. Might see some strength coming around for the euro, for the dollar, with CPI dropping a little bit, but this is that fluctuation that we anticipate a little bit for the CPI numbers, inflationary numbers here. Following on from that, Wednesday, Eurozone, Euro numbers again, but not a big Eurozone number, so I'm not too keen on this. We do have a lot of US news, but these are not big price movers here. And then following on from that, on Thursday, we have Lagarde speaking, President Lagarde speaking. So pay attention to that on Thursday evening. Following on from retail sales numbers for the US, looking at some recovery, core retail sales number looking from a minus 0.4% to a minus 0.2%. So might see some recovery there. Retail sales number going from a minus 1.1 to a minus 0.8 for month on month. So looks like a little bit of a recovery there as well. And then pound, I'll talk about it on tomorrow. But we have the Eurozone CPI numbers look at this, CPI month on month looking like a good rebound, going from a minus 0.1 to a plus 0.4%. CPI month on month, and CPI year on year going from a 2.2 to a 3%. In this case here, what I could anticipate for the euro data for CPI is possibly this going to be about a 0.3%. I don't think you'll get all the way to 0.4. I think it'll be a 0.3. But the year-on-year number should be at a 3 or possibly even higher than 3% for year-on-year. But the current approach with the central bankers is the expectation or the view that any inflationary number or any improvements in inflationary number is a transition, it's transitory. So they are still going to hold back, wait a little bit and see whether this is sustainable, whether this could be applied towards the longer term. So I don't expect a long-term trend change because of these numbers. I think we're going to see some volatility on Friday evening with the CPI numbers coming around, but the main thing is to pay attention to the overall trend, overall movements in terms of the euro dollar. And then after that, we do have the consumer sentiment for the US looking to stay quite strong at about a 72.2 number. What all this means in terms of the euro dollar is here looking at the charts, euro US on the H4 time frame. Last week when I spoke about this, I said I was going to test that 1.19 before dropping down towards the 1.1766. It didn't test that resistance as much, but it did drop all the way down as much as this week we see it testing that 1.1766 before bouncing up towards the 1.18 level right now. So putting it all together, what I could anticipate, possibly some stability coming around from the Eurozone in terms of the CPI number. What we could see is the US retail sales number, the US inflationary numbers coming a little bit of a fluctuation. I think that we could see from this point that move towards 1.19 again, back up towards that 1.19. I would be very careful here because your stop loss might be 30 pips at this point with a 80 pip take profit level. But bear in mind, you're right in the middle. You're not at this support level, you're in the middle of this point. So I wouldn't rush into a trade, especially on the euro dollar right now. What I would be waiting for is possibly for it to go above that 1.1835 level. Wait for the euro dollar to go above that 1.1835. You could have a tight stop loss at about 20 pips. For a good take profit level at about 60 pips, you're looking at a 1:3 risk reward ratio towards the upside for the euro dollar on the H4 time frame. This will require you to be sitting out waiting for that move, about a 20 pip move towards the upside before looking for buying opportunities above that 1.1835 level. So quite straightforward, a little bit of waiting for the euro dollar. Looking at the euro pound here, if we anticipate that the euro dollar is likely to move up that 60 pips, I'm actually more keen towards this euro pound number if it breaks above. It could drag. The euro dollar moving up could drag the euro pound up. I would be looking for buying opportunities above that 8538 resistance level now. So what you'll be waiting for is, let's be a bit more conservative, about a 8545. Above 8545, you would have a 20 pip stop loss, very good 20 pip, 40 pip take profit level, 1:1 or 1:2 risk reward ratio towards the upside. You could even move your resistance slightly higher. So you're looking at that move towards the upside on the euro pound, 20 pip stop loss, 40 pip take profit level 1:2 towards the 8590 resistance level. But as we look into the euro dollar possibly moving up, we look into the euro pound possibly breaking that resistance and moving up. This is also dependent on what the pound dollar is likely to do. So coming back to the news, what could happen here on the pound dollar today being Tuesday? Look at the claimant count numbers, possibly at a minus 7.8%, 7.8K last. We could see some improvements there, but I think that we're possibly going to see a little bit of a stronger pound because of unemployment rate going from 4.7 to possibly a 4.6. claimant count number could improve there. Average hourly earnings, dropping a little bit. That might be a bit of a concern with the employment change quarterly going from a 95 to a 178. So you might see a bit of a mixed bag of data here when it's released at 1400 hours GMT plus 8. With this mixed bag, I think that we're going to see on the charts here for the pound dollar on H4 time frame that similar mixed bag of reactions. The last time I spoke about pound dollar, I said that it was likely to test at 1.3747 and reject and bounce up towards 1.3870. It's done. I like how it's done that exactly. It came down, test, and bounced straight up towards that resistance level. At this point, I think that with the news to be released, what we could see is that break upwards, but similar to what happened last week and the week before. I think 1.3870 is a very strong resistance, and I think that we might see, with the mixed bags of results, we might see that test and turn back down again. So what I would be looking for here is for it to test and reject. So look for that selling opportunity as it comes back. If it comes back down below 1.3870, you could be looking at about 1.3854, 30 pip stop loss, 40 pip stop loss for a good 90 pip take profit level, a 1:3. Again, a 1:3 risk-reward ratio to trade within that range back towards the 13747 support level. So look for that test of the resistance, look for that rejection before jumping into a trade, possibly towards the downside on the pound dollar. And if that drops, if the pound dollar does drop, I might move it a little bit nearer because the news is to be released, right? If the pound dollar does drop that way, then this would support the euro pound to be shooting back up towards the 8590 resistance level. So a lot of things to look out for today, especially on the euro dollar, the euro pound, and the pound dollar. Do trade carefully because there is the news to be released. The claimant count numbers can move markets quite significantly, and it does have that tendency to be able to surprise the markets a little bit as the UK comes out of the current, the previous lockdown. We could see the impact in terms of employment being applied to these claimant count numbers. With that, I'll pass it back to you, Scott.
Thanks for that, Jin. And just a quick note here, guys, we do have a few links to refer to in the chat. So if you're looking to see a replay of the currency call and any trade ideas, educational material, and breaking news analysis, that's the LCMS Traders YouTube link I've sent. And then if you're just inquiring to learn about the steps we take to put a trade idea together, I've got the 5 steps checklist that Jin and the team here, we use to identify profitable trades over and over again. So there's that link there. And we also have next, we've got Kim Hong, currency strategist at LCMS Traders. He's going to discuss a Euro-Swiss trade idea. So over to you now, Kim Hong, in regards to the trade idea.
Thanks, Scott. More euro coming on Tuesday. All right, more euro. Euro-Swiss. Euro ECB to consider slowing down assets purchase. Okay. So this trade idea was actually fired out on the first day of this month. Okay, so well, based on the screenshot, okay, you guys can see for those who actually trade the pattern formation, okay, you can actually see that there's a double bottom. All right, and fundamentally speaking, okay, this was actually one day, right? I think it was one day after the release of the annual inflation data from the from EU. Let me check. Yep, it was reported yesterday. Well, it was reported on August 30th that annual inflation in July has spiked to a 10-year high level. Now, previously I mentioned that this is just the beginning, right? I mean, inflation may actually be transitory as claimed by the central bankers, okay, due to temporary effects, transitory effects, okay? But nonetheless, it's a good start, okay? For the Eurozone, it's a very good start because we have been seeing low inflation for the past, I don't know how long, all right? And inflation has been a main issue for the ECB, okay? They have been trying so hard to get inflation up, but it's just to no avail, okay? So, in July, we see a spike to a 10-year high level. This is actually a good start for the ECB, all right? So with that, the central bank, okay, may actually be looking at a slowdown in QE, okay? That was back in 1st of September when I actually wrote this post, okay? So it turns out that, I guess, from most of you guys already know from last week, okay, the ECB's meeting, they did slow down, okay, asset purchase. They did slow down, specifically the pandemic emergency purchase program, okay? By how much, we are not sure as of, well, the last week, okay, because they have yet informed the public on the rate of slowing down. However, okay, ECB President Lagarde mentioned that this is not a tapering. Okay, this is what was that? What's the term that recalibration? Okay, recalibration of quantitative easing, recalibration of PEP, the PEPP. Okay, so it's a bit of a if she did not actually say that, well, then we are likely going to be seeing euro strengthening. Okay, but because of what she mentioned, all right, let me just show you the chart. Okay, you're looking at the daily chart of euro francs right now. Okay, because of what she mentioned, on the 9th of September, okay, this long bearish candle that you're looking at right now, okay, the euro actually weakened, all right? But, the main reason behind this is because of the whole uncertainty, the whole unsure of whether this slowing down of the PEP, is it going to be the first step towards another tapering, right? Are we going to be hearing another tapering announcement coming from the ECB, okay, this month, right? Besides that, okay, we have already heard from Lagarde that the plan for the PEPP QE is going to be discussed in December. So unlikely we're going to be hearing about anything about PEP, okay, any tapering issue on PEP this coming meeting, all right? But don't forget, there's actually another part of the QE, okay, the ECB's QE, and it's the APP, all right, Assets Purchase Program. Will we be hearing anything on that? That is something that we should be looking for, okay? So nonetheless, okay, all this aside, this trade idea, Euro francs, was actually triggered on, I think, 2 days after the trade idea was fired out, right? On the 3rd of September. Yeah, it went up, and then because of the slowdown of the QE, which is not considered as a tapering, okay, it actually came back down a bit. But personally, to me, I feel that, two improvements have been seen. Okay, first of all, inflation has risen to 3%. Okay, 10-year high in the Eurozone. Okay, this is the first improvement. Second improvement, look, like it or not, it may not be considered a tapering. Okay, it's still a good start for the Eurozone. All right, if you say this is coming from the Reserve Bank of New Zealand, Reserve Bank of Australia, then I would say it's not too much of a concern. But if such a comment, such a slowdown in the QE were to come up from the ECB, okay, whatever you want to call it, a tapering, a recalibration, it's still a good start. They are still going to purchase less assets, less bonds, government bonds, in response to this whole crisis, this whole pandemic crisis, okay? And this may actually be a start to, the next tapering, okay, or recalibration, okay, the way Lagarde puts it, all right? So personally, I feel that this trade idea, this direction, okay, the long direction, bullish direction is still valid, okay, which is why I'm still holding on to this trade. That's one thing. Second thing, I mean, this is I would say a swing to a position. I wouldn't say it's a position trade. I would say it's more like a swing trade idea, okay? And the stop loss is I think it's 180 pips. Yeah, 180 pips away from the entry. The reason, okay, I have to be very careful with my words over here, right? The main reason for me holding on to this trade, okay, it's because fundamentally it's still valid. Okay, it's not because I have a wide stop loss of 180 pips that I can risk. Okay, so guys, don't leave a trade on just because you have a wide stop loss. Okay, that's what I'm trying to say. It's not a good practice. Okay, fundamentally we have strong drivers. Okay, good inflation and a slowdown in the PEP, the PEPPQE. Okay, so with these two reasons, okay, although it may still be a bit early, it's strong enough for us to build a conviction, okay, to be convinced that the ECB may be giving us more hint in the following meeting, okay, or maybe the next few meetings, okay, in terms of QE tapering, which is why I'm still bullish on euro against the francs. Okay, francs, well, like I've mentioned before, the way I trade it is, it's based on most of the time it's based on the fact that the Swiss francs is a safe haven currency. Okay, so when we have optimism coming out from a specific currency, like say in this case the euro, okay, then I will be buying the euro against something of a safe haven characteristics like the Swiss francs, okay, or the US dollar or the Japanese yen. Okay, so yeah, this trade idea will still be valid as of now, and I'll continue to supervise this trade idea. Okay, and if anything, I will update you guys on Traders Club. Okay, so with that, yeah, that's all I have to share for the trade idea today. I will hand it back to Scott.
Thank you for that, Kim Hong. And again, guys, I've just shared the link to the article as well for the Euro-Swiss trade idea. So you can see, why Kim got into the trade. And also we have that, video we've just seen there from him where he discusses the trade management as well. So really, I think I'll just quickly share the YouTube channel because there've been a few changes made. And I think it's definitely worth checking out here. So we've got the YouTube channel. I'll send the links again. We've got, your number one point of call. If you're very new to Forex, watch the 4-day Forex Kickstarter. They're all broken down into smaller duration videos. There's around 46, but definitely worth watching once you've done that. Then check out if you want a recap of the daily currency call. We've got each episode has been uploaded. Then within the currency calls, there are certain segments. We've got the breaking news analysis that's uploaded. The trade ideas are all uploaded as well. Then we've also got educational points that are included in certain videos as well within the currency calls, and they're all broken down as well. And we also have the LCMS Traders Club, sneak peek behind the scenes, just so everyone can see what it's actually like to be in a very professional, well-run, essentially like being on a trading floor, a virtual trading floor. So speaking of that, we do have Daniel, one of the senior trading coaches at LCMS, and we did have a Monday live trading call last night, and he'll just discuss that and also give a little bit more information on what the LCMS Traders Club is as well. And over to you.
Yeah, sure, Scott. Thanks very much. Okay, so yeah, we had a group coaching sessions last night at 8 p.m. GMT plus 8 Singapore timing. Okay, we actually went through what happened last week, what happened, the news last week fundamentally could impact this week, and the current market, and then what we look at the current market conditions and what's the news can happen the whole week this week, so we can identify possible trades, understand each other, for everybody to ask questions and learn from it, ask questions, how does the news impact the overall market sentiments coming in. So now, so you're really very interesting. Yesterday, we looked at the current market conditions, cover a couple of, like Jean has mentioned yesterday, to this week is a lot of euro and pound news. Of course, the major news are the US CPI data and the retail sales coming in. We look really very carefully and see what kind of possible trade to be taken. Maybe, I would share one or two of the trade ideas, or what possible the market could move from there. So let's look at what happened. Maybe I'll share a little bit, no, I cannot share everything, right? But what we look at just last time alone for Euro Yen, right? Because Euro Yen, we're looking at a couple of news coming in. Lots of European news coming in, could be more or less a little bit stable. So we could see that, very by basing on just the technical analysis alone as well, lots of rejections around the 129.6, and then most likely will move upwards in directions, and then again hit the very strong reaction zones here, and most likely will come back down. So we were looking at again a possible drop back down, two movements moving up and then comes back down. So a possible trade, and then if it comes back down with the safe haven currencies could be coming stronger from yen, then it drop at below 130.20, then we could take a trade a downwards direction. So something that we were looking for. And the other one was the pound yen. Now pound yen, with the Jean already has mentioned just now, where we expected the news to be happening. Correct. I mean, the employment change coming in. What will be happening is possibly what we look for is possible strengthening of the pound, and it breaks above 152.58. It's slowly moving up there. If it breaks above during the news, probably most likely it's a short-term trade move. It was buy at above 152.58. And going possibly just below the resistance zone of 153.53. It's really be looking at the fundamental news, the news analysis, and coming out lots of trade ideas and what possible things to do. So it's really very beneficial to lots of members, and the members really enjoy that and benefit from that, making profits together. Okay, so yeah, that's what's happened last week. So again, for those who are already members, do remember to join everyone in the club. We have lots of members joining us and asking questions and coming together. It's really very exciting and very beneficial to all of us. For those who are not already in the club, I would really suggest to come in. We have the LCMS Traders Club here. Okay, we have the LCMS Traders Club here. You can see this platform. We also will paste it up the link on the video for people to review quickly. Just recap of what's happening here. We have a trading floor coming where a lot of interactions coming in, trade ideas coming in. In fact, even for the Monday sessions today, if there's a trade idea, we'll call here. We'll put it inside the club there as well. And we also have the Markets Watch where Kim Hong will put in all his trade idea, looking at the trade ideas coming in, and he'll give a firm update of what could happen, whether it's holding or he's going to exit out or close or not valid anymore. Correct? And we have lots of things like education question and answers coming in, coming in where all the different analysis, how we look at divergence, trend series, in fact, the 4-day course, everything is all here as well, where you can slowly link and learn from there. Okay, so all you need to do is go to tradersclub.lcms.com.sg. Scroll it down. We have other things also like signal analysis, so that you can not only earn from the signals but also learn from the signals as well. And in this Traders Club, the signals are 5 minutes earlier than the the free Telegram channel here. So all you need to do is come in at $49 a month. This is without a doubt the least you have to do if you want to be stable and profitable as well. So click it in here. Sign up, and I'll see you. This Wednesdays we have a live trading sessions together with everyone, which go together. The coaches and the members will trade together, discuss on trade ideas, and maybe perhaps enter the trade and benefit together. So I'll see you guys on Wednesdays, 9 p.m. session. See you then.
Thank you, Daniel. All right, guys, that is the conclusion of today's call. And just the final link that I did share there was for the Forex Briefcase service. So we do offer a trade for you service where we do manage your account. We are just about to go to 36 months now since inception, and We're nudging 100% for 3 years, very consistent returns, low drawdown. So if you are looking to learn more about that or looking to invest as well, which, all the panelists pretty much are invested as well with Forex Briefcase personally, I would strongly recommend it as a mechanism to diversify your portfolio as well. Click the link there, the forexbriefcase.com website, put your details in, and we'll be in touch, and we'd love to have you on board. But it was great today, guys. Thanks for joining us as well, and we'll see you tomorrow for the pound announcement.